We are watching The Money Show and I'm with you, Kavita Thapliyal. And today is a very important and a special show that we have put up for you. India's real estate market, that's right, from emerging micro markets to high growth corridors, demand is picking up in pockets, supply is shifting, and first time home buyers are back in focus. But here's the big question: where should you buy and at what price points? Across the country, new pockets are opening up, some affordable, some aspirational, but navigating this landscape isn't easy. Prices are rising in key cities, inventory is tightening, and for first-time buyers, the margin for error is shrinking. So today, we cut through the noise. That's right. We'll map the most promising real estate hotspots across India, decode which cities and micro markets are worth your money, and most importantly, identify realistic budget brackets for first-time home buyers in today's market. Joining us on the show is Akhil Gupta from No Broker and Pankaj Kapoor from Liasis for Us. So from affordability trends to investment potential, and from tier 1 pressure zones to tier 2 opportunities, we are bringing it all down today. And this is your ground report on where India should buy next. Good evening and welcome both of you on this very special edition of Personal Finance. It's all about real estate. It's all about first-time home buyers. So let me start with you, Pankaj. Let's just get the lay of the land first. Which cities are heating up and which are overpriced?
I'm saying that the North India is heating up a little bit in the sense of heavy investors' participation, very limited supply availability in comparison to the other cities. So the price growth in the North Indian cities, especially Delhi, NCR, Lucknow, and the surrounding North Indian cities, have been seen very high. And they were also dependent upon the investors' participations when it comes to the sales. So if you take cities like Gurgaon and all and Noidas and Ghaziabad, the price growth and the CAGR growth in the last 4 years post-COVID has been highest. And apart from that, the other cities, especially when it comes to the Mumbai and the South Indian market and Pune, the price growth has been range bound between 5% to 10%. So it has not really gone into the speculative zone. So other than the North Indian cities, the rest of the cities, prices are highly moderate, and the supply flow has also been very high, which has kept prices in check. So that's my call, especially when it comes to cities landscape, how it is really spread across. So what I have seen is one more thing is the affordable housing locations, the one which were after the or during the COVID time, the cities which used to cater to the affordable segment like Ghaziabad, Noida, we have seen very high price rises in those particular cities. Although people are talking about very high price increase in the luxury and ultra luxury segment, but the growth in comparison to the affordable locations in those particular locations, which are luxury locations, have been lower than the affordable locations. So that's kind of a take which I have, especially when it comes to the price growth.
In South, what areas have you identified, Pankaj?
In South, like if you see the most affordable location is in Bangalore. If you see, when I say the affordability measurement, I think the rental yield is a very nice barometer. If the rental yield is increasing and appreciating and touching in the range of 4% or 3.5% and upward, that means the capital value appreciation has been muted. So those locations are highly affordable because rental are very transparent to the people's paying capacities. Capital value can be speculated by the investors' participations in that particular segment. So the rental yield in Pune, in Bangalore, in Chennai, Mangalore, smaller cities, Mysore, and all those things have been very, very good. So those are the cities where I have seen a very, very high appreciation. So Bangalore and Hyderabad also, I have seen both the price growth as well as rental yield improvement have been very, very good.
Akhil, do you concur? And would you like to also identify new areas where the demand is heating up?
Yeah,
So
hi.
sorry.
Yeah.
Yeah, please.
Akhil, yeah.
Yeah, thanks for having me on the show. So I think what Pankaj ji was touching about were more or less in line to what we see in terms of the data from the broker also. So real estate is no longer a national phenomena. It is typically driven by the cities. So depending on the city, trends are changing. So Bangalore is seeing immense demand. And if you talk about areas in Bangalore, the North Bangalore and East Bangalore has seen the surge. So Yelahanka uh, has seen a massive rebound. In fact, if you see the number of launches which have happened in Bangalore, the maximum of them are happening towards the Yelahanka side. So number of launches which have happened in Yelahanka in quarter 1 of 26 is equivalent to what was launched in whole of 25 last year. And then the eastern outskirts like Hoskote, Sarjapur, they continue to grow in the Bangalore area. In Mumbai, we see that there's a massive polarization which is happening in Mumbai city, and it is typically towards the redevelopment. While in the Navi Mumbai area, there is a lot of fresh supply, clear inventory which is coming in. And if you go towards the Pune side, we have seen around 8% kind of annual price growth. So as Pankaj ji was saying, the price growth is now muting down. So what we saw after COVID, where just after COVID in 2, 3 years, the prices went up by 75, 100% in some areas. So that has now come down. So in Pune, typically we are seeing a flat or little slowdown, with the areas being in focus continue to be on the Wagholi and the Mulchi kind of a area where we are seeing it. And the
Right.
best way, as we were discussing, the barometer remains the rental yield. And in some of the areas in Bangalore, the rental yield is highest in India. So rental yield in Bangalore, as per the report also what we have shared recently, is around 4.01%. And that is typically driven by the massive tenant demand, which is due to the tech professionals who keep migrating to Bangalore. And this is followed by Pune, where typical rental yield is around 3.6%, Chennai is around 3.5%. And the massive demand now is for 1 BHKs and 2 BHKs. And as I think we were discussing, and it has happened in the past also, that in last 2, 3 years, the focus has from all the developers was around the luxury, and the maximum inventory which was coming around was three plus BHKs. So that is now coming down. Builders have started launching the smaller units also,
Got it.
and yeah.
All right. So rental yield a big plus. Pockets of Bangalore and Pune, but yes, demand coming up in pockets of North also. But what I want to understand from both of you, we are also looking at tier 2 areas, if that you can identify, and also, the places that you've mentioned. Is there also first time home buyer demand that's picking up over there? Or the focus is more on rental yields that we are talking about? Pankaj, I'll start with you.
So in terms of the tier 2 cities, if you see some of the cities like Surat, Jaipur, Chandigarh, Lucknow, Vadodara, Mangalore, these are the cities which are showing very, very good promising growth. Even the Navi Mumbai, even if I consider this as one of the cities, like, since the Greater Mumbai is a separate, and although both are a part of the MMR, Navi Mumbai is also one of the reasons which is also showing good promise. And when we are seeing the promise from the angle of the current market dynamics, as well as the future infra and the investment plan which is actually government is laying down. So these are the cities where the growth is quite good. And the second questions which you asked me about, other than the rental yield, how the affordable segment is doing in the major cities. So it's happening somehow, like, very contrarian, like, less than 50 lakh segment. We have seen a declining supply because a lot of developers were focusing on to the new launches in the bigger segment. Is still a price range between 80 lakhs rupees to 1.5 crore segment. We have seen the maximum number of sales as well as supply, which is lying. Although in the recent times we have seen the market actually got little skewed towards the luxury and ultra luxury segment, because a lot of supply was introduced in that particular segment, but we are seeing a bit of a moderation which is taking place. But going forward, I see the market is taking a turn, because luxury, ultra luxury were highly dependent to the investor sales, and investors market seemingly getting muted and traction is lesser. So the builders will be moving in the mid and affordable segment as far as the new launches which will be coming. So the market is right now poised for a shift in the sense of the way the new supply was coming, and the new supply is likely to come going forward, and the sales compositions will also shift to the affordable and mid segment more in comparison to the luxury and ultra luxury segment.
Mm-hmm. Akhil, in your experience, what areas would you like to identify in tier two? And also, is it over there just an investor play, or it's an end users market?
It's
So,
sorry.
Right, Akhil.
for no broker, typically we are right now in top 8, 10 cities only. So we are not present in tier two. But I echo the sentiment to what Pankaj mentioned. There has been, because we have a portion of no broker business which we see in tier two. There we see uptake in areas like Jaipur, Indore, which is coming in. And coming into the new buyers on the cities where we operate. So what we have seen is that there has been a demand from first time buyer because of the loan rate which has come down, because our repo rates are already at the lowest in last few years, and the loans, if you see, the prices have come down by 4 to 5,000 rupees per month for around approximately 60 lakh rupees loan. And with higher inventory available, now the negotiation power is back in the hands of buyer. So if you see, around 2 years back, it was a builders market and they were just launching premium, super premium project. And now with the supply available, the launches which happened in last 2, 3, 4 years, as they have come out into the market on completion. So buyers have got a lot of negotiation power. And certain markets like Hyderabad, where there has been a big crash in terms of the inventory which is available, it is a very poised market for people to buy in this particular area. But at the same time, coming to your question on affordability, there has been a dearth in terms of the affordable project launches and the availability. Like if you talk especially of NCR, there has been zero affordable launches in last 2 years. And even in cities like Bangalore, Hyderabad, and Chennai, builders have almost stopped building entry level projects for the buyers, although government is doing some support in Chennai. But if you see, typically in Bangalore, now the prices are close to around 8,500, 9,000 rupees per square feet in the outskirts, eastern outskirts like Sarjapur and Yelahanka in the north, which I was talking about.
I do have a lot of other questions for both of you, but then our viewers also have sent certain queries. And Pankaj, this question is coming in from Akshay Sahai, and he wants to buy a place in Pune close to Hinjewadi, and he's looking for a budget between 75 to 1 CR. And he has a child, and he would like a place or a project close to his school as his workplace is also in the same area. So any project that you can think of that fits in his budget?
No, there are two sides of the market dynamics. One axis is market in terms of the supply and sales has been robust for last 3 4 years, but there is also increasing execution risk in the project because builder has introduced new supply, but there have been a slowdown in the construction pace. So what we have identified the projects which are of A and B grade developer, we have removed the developers whose performance rating is lower. So in that particular sense, like area of Hinjewadi and Wakad, they have substantial number of projects altogether, and in my database there are 83 projects, but out of that we have shortlisted few projects. So depending upon their possession timeline, so the nearest is December 27 possession is Trident Tower of Paranjipe schemes. And apart from that, there's a Godrej Evergreen Square Hulk, although the position is March 30. This is a project launched last year itself. And there are some other like Tracer, Troves, Adi, Siddhyachal Associates, Gera Developers Projects, Joy on the Tree Tops. So these are some of the projects they can choose. Most of them have a ticket size between 75 lakhs to 1 crore, and the price range in the range of 10,000 to 11,000. So they can have a look at it, and the area is well developed. Both Wakad and Hinjewadi, there are enough schools choices which are available. One thing I only advise is that go have a look at the projects, look at the sizes, look at the prices, and also look at the builder's track record and history, and choose the locations on the basis of where you work and how close the project is to the your requirement of your children's school.
Okay, perfect. So this is as per the possession timeline recommendations from Pankaj. Akhil, what's from you?
So I think for Akshay ji, the best value will come in the areas like Kivale and Ravet, where the prices for 2 BHK starts around 70,000. And in the mid-range, this Pimpri Chinchwad, where 80 lakh rupees kind of a price range which is there. And right now, if you see the Pune market itself in the recovery phase, and if user has a constraint on the budget, what typically is suggested is go for the resale property, where you can get around 10 to 15% discount from the what is available from the new builders. And one more area which I see in our system is that Tathwade and Wakad, where prices starts around 90 lakh rupees and goes up to 1 crore, 1 crore, 1 to 1, 1.1 crore. Those can be the areas which Akshayji can look into.
Yeah, resale is a good option that you've asked him to consider. But then buying resale property, one has to really also consider the state of the building and, what is the condition. So how can one go about it? Akhil, can you guide over there?
So typically what happens, there are different cycles in the property, correct? If you are buying a property which is on the pre-launch, you should wait for anywhere between 3 to 5 years. So typically what we suggest, if somebody is looking for a property which is either it isn't ready to move in stage, or it was built in last 5 years. So typically what happens, it takes around 3 to 5 years or maybe 3 years for property to get occupied, for the community to get built. And a property has an appreciation from anywhere between 5 to 9 years. Up till 9 years, you see a good appreciation into the property. And after 9, 10 years of building and setting up the property, the prices start to get stagnant, or it may decline if there's not enough demand from the tenants. So that's why ready to move in property anywhere in 3 to 5 years range, if it was built and a community has been built up, it possesses a very, very attractive buying potential, because you will go and see that if there is a new property coming, even if right next to that particular property, it will typically be 10 to 15% expensive than that property, and you will have to wait for the delivery also in that case.
I do have a lot of other aspects to discuss with you, but then my time is up. But thank you so much. You both have been really superb on the show and given your valuable advice to our viewers. And for all our viewers, this is the first edition in our personal finance domain, where we'll be focusing on giving you real estate advices right from our experts. Just in case you want any guidance on your home buying or your home investment, do send across your questions. We'll flash the WhatsApp number on the screen and the email ID where you can send across your questions. Thank you so much for watching. Goodbye.